That's what's happened to US house prices. So there was a long boom which came to an end in 2006, and house prices have been falling ever since by a lot. Okay, so you can do the arithmetic, but that's a big fall. I think it's of the order of 30 or 40%. And so the big rises in unemployment in the US are the recession. So the US had a serious recession in the early 80s, and then they had one in the early 90s, and then they had one with the tech wreck, the collapse of the stock market in 2000. And this recession already looks significantly more serious than the previous two. And I think there's a very good chance it will, unemployment will exceed the peak in the early 80s. So unemployment in the US, I think, is now 8.9, and it's going up very fast. But if you think things are bad in the United States, spare a thought for Japan. Look at the scale of the time period. This is data going back to the late 1980s. And industrial production in Japan potted around 100, up and down a little bit, and then in late 2008 it fell off a cliff. And so industrial production in Japan has completely collapsed and fallen by whatever it is, about 40% over a period of a few months. The Japanese economy in the last 2 quarters, so that's the December quarter of last year and the March quarter this year, has contracted by about 8%. By comparison, the Australian economy contracted by 0.5% in the December quarter. The Japanese economy has contracted by 8% in those 2 quarters. And that's what's happened to their export volumes. The one bright spot in the global economy pretty much is China, which is still growing quite strongly and probably accelerating. They had a very, very big fiscal stimulus package, and that's been successful, and they're growing really quite strongly, so that's good. But now let me show you another one of these summary graphs, which every time I put it up I can't believe it, but there you are. Let me tell you what it is. The OECD is the, if you like, the rich country club. I think it's now 30 countries. It's basically the developed world. Every developed country you can think of is in the OECD. And this construct, the output gap, is the OECD's estimate of how far you are away as the whole region together, so that's all these countries aggregated together, how far they are away from, if you like, full employment. So if you're at 0, then that's the level of output that you can sustain without either generating rising inflation or falling inflation. When you're above 0, you're generating rising inflation, and the powers that be will tend to slow the economy down. But this is it's a construct, so you don't actually measure the output gap, you have to estimate it. But the biggest recession in the historical record is for the OECD is in the early 80s, when the output gap grew to about 4%. What is the forecast of the OECD for this recession? It's more than twice as bad for the OECD region. So that's what the OECD thinks is going to happen. And we shall see, but it's certainly, in terms of aggregating the whole developed world, that gives you a sense of just how big a deal this is. Here's just a chart on what has happened to global equity markets, and the striking thing, so the green is the US broad market, the purple is the European broad market, and the whatever that is, orange is the Australian market. The interesting thing is just how similarly they've moved. There isn't that much difference. Now I've got a bunch of charts on banks. In a sense, banks have been an important part of the transmission mechanism of this global financial crisis. So I'm just going to show you a bunch of charts which partly show just how different Australia is. As you would probably be aware, Australian banks are relatively profitable. They've been in the news for being profitable just recently. And the interesting thing is that we have 4 of the highest rated banks in the world. Now the class of banks with a rating of AA or AAA used to be significantly larger. If you go back 18 months, there are a lot more bars that were either AAA or AA. The 4 major Australian banks are all AA rated, and they are now a large share of all the banks in the world that are rated that highly. Most of the others have moved right on this chart. And here's another way of looking at what's happened to bank value. Citigroup is the one I was talking about before. It's got a little smaller. So that's what Citigroup used to be, that's what Citigroup used to be worth in the middle of 2007, and that's what they're worth now, which has something to do with why they've changed management. But it's happened to quite a lot of these big banks. They've got a lot smaller. Interestingly, we now have, our 4 major banks are among the 30 largest in the world now, because so many other banks have got smaller. Ours haven't, but so many others have. This is a bit of an obsession on banks, but that's because, to some extent, surviving this financial crisis, I'm pretty confident Australia is going to do significantly better than most of the advanced world for a bunch of reasons, one of which is that we have a functioning financial system. And we have a functioning financial system because we have profitable banks and because there's a government guarantee, which has been necessary to keep the banks in a position to be able to borrow in international capital markets. The other thing I wanted to show you was that there has been quite a big differentiation by the markets about banks. So if you look at how much bank share prices have come down in Japan, the US and the UK, you see that basically share prices, if you had $1 invested in banks in the US in the middle of just before the financial crisis, that dollar was worth, at the trough, was worth 20 cents, and it's now worth 40 cents. It's not a great return on your money. The Australian banks have also suffered, but they have suffered nothing like as badly as the others. I am getting near the end. I showed you a chart earlier of what had happened to US house prices, and I wanted to add Australia to that chart just to give you an idea of how different house prices have been in Australia compared to the US. And that's this chart. So the blue line, the green line you've seen before, and the Australian line shows that we have also had a very substantial boom in house prices, but that boom came off the boil in 2003 and has been much more moderate since then. There are a series of reasons why Australian house prices are, I think, much more likely to remain around the levels they are now, rather than to do what the US house prices have done, and I'm happy to talk about some of those reasons. We have seen some small falls in house prices in Australia, more at the top end of the market than at the bottom end of the market. So the suburbs with the highest house prices have had bigger falls than the suburbs with the lower house prices. But there's been some small fall over the recent year or so in house prices. But I don't think this is the precursor to the sort of performance that we've seen in the US for a bunch of reasons. Now, another aspect of the financial crisis which is very important to Australia is what it's done to commodity prices. So this shows you for 2 of our big exports, iron ore and coal, the spot price, which is the price that you can trade at in the market all the time, and the purple lines at the bottom there are the contract prices which get written for a significant proportion of sales. The contract prices get written once a year and then they get renegotiated. So as you can see, the contract price in April of last year went up very, very substantially for both iron ore and coal, and now they're now coming back down again. Just how far they come down remains to be seen. We've already got the contract price for thermal coal, but this is one respect in which Australia is hurt very badly by the financial crisis, namely, and the global recession, namely that we are exposed to big falls in our commodity prices, and that strips income out of the domestic economy.